What's up, guys? Today I want to talk a little pro tip when trading the wheel, when you're writing covered calls and when you're writing cash secure puts. A question I really get asked all the time, and I really kind of do it to myself because I bring this up so often, and that's buying to close, not letting your options get to expiration. And a lot of the times I'm going to be doing this as soon as I write the call. As soon as it's fulfilled, I go in and I set a limit order for a buy to close at a certain percentage. So in this video, I'm going to show you a few calls I made today. I didn't write the limit buy to closes because I wanted to show you. I'm going to show you how to set that up and give you kind of some ideas of why I choose the percentages that I choose to close and how you might be able to formulate your own strategy. If you are new to this channel, my name is Brad. I have made a bunch of videos on the wheel, selling covered calls, selling cash secure puts. I'll link those in the description down in the comments if you want to check out a further detail. I'm sure if you click this video, you kind of know what the wheel is, or at least have an idea of the covered call and the cash secure put. But I think it is new, especially to people that are just beginning this process on the whole like buy to close. Like why wouldn't we just go to expiration? Why wouldn't we take this all the way and get all of the profit? Why would we give some money back? And that's kind of what I want to break down in this video. So here inside Robinhood, you can see, guys, I have a bunch of calls and puts, but there are a few that I made today. And the first one I'm going to show you is this Cisco call. So this Cisco call that I made today, this is after market hours. So the value of this option may be a little bit off. We know that, after market hours, options values can be a little bit crazy. Not a bad day for today. I'm up $5, but this average credit, I got $33 for this particular contract. Now, if I were to ride this all the way to expiration and this were to expire out of the money, that'd be great. I would get $33. And everyone says, like I said all the time, if it's not going to get assigned, then why give some money back? And if you've been doing this for any length of time, you know that you can look so good on Thursday. It can look like there is no shot that you are going to be assigned, no shot that this thing is going to end up in the money. And then you wake up Friday after some crazy news after hours or whatnot, and boom. Now, we don't fear assignment, but we have to admit to ourselves, it is a little inconvenient to be assigned. So if we can get out before that happens and lock in profit, that is a good thing. So the real reason why I do this is because when we write calls and puts, we want to write that call or put, we want to collect that premium, and we want to get the hell out of there as fast as possible. And a lot of the time with the money that's remaining, it's not worth it risking that on the last day. Leave down in the comments if you've been doing this a while and you looked really, really good on Thursday and got screwed on Friday. It's happened to everyone. It may not have happened to you yet. Just like riding a motorcycle, eventually you're going to fall. So although I monitor all my options pretty much daily, I kind of have my computer open most of the day. It is still nice to have the computer looking for a value that you like. And that's essentially what a limit order is. When you click into one of your options, okay, when you click in the options, Robinhood, the first thing they give you this option for up here is buy to close. Now, if I want to buy to close this right now, they have the mark price listed as the limit price, right? The limit price they list as the mark, the price right in the middle between the bid and the ask. We can see the bid is 0.25 and the ask is 0.30. So they kind of find a spot right in the middle. Now, if I were to do so, I would only get 15%. But 15% one day, not that bad. But instead, what the number that I've come up with is I want to lock in 75% of the profit when I'm doing the wheel strategy, when I'm writing calls and puts. It's a little different with my poor man's covered call, and I'll give you that number in just a minute for what I use. But for me, if I can get 75% and not get screwed on Friday, I am going to do so. The next reason that I like to close early is because we know the further out from expiration we get, generally the more premium that we're going to get. So when we just go in a 1 week timeline, it's hard to be right every single week. It's hard to think on these 1 week scales. When you start to close and roll out to a further expiration, now your contract isn't really a weekly. It's more of like a 1.5 to 2 weeks. And what I've seen over time is that when you close early and then you rebuy in and roll it out to a further expiration, you are going to collect more premium because that rollout to the further expiration is going to be even more premium than you gave back. Don't think of it as like buying to close, like I'm giving back premium. Think of it as I'm buying to close to get out of this crappy contract that has almost no value to then hop back into a new contract with a ton of value. That's kind of what it's like. It's not one buy to close and that's it, I'm done. It's the rolling process. It's the limit buy to close and then reopen for a further out expiration and maybe even a better strike price to give yourself a better position. So here's essentially all I do. As soon as Robinhood tells me that this option fulfills, I look at my option price and I have $33. I want to claim 75%, and if I get to 75%, this is going to be awesome. Now, I've said before, I close all my options. I try to close all my options. If it never gets to 75% profit, yeah, I'm going to get to expiration. If this thing is in the money and it's not profitable at all, I'm definitely not going to close this. But what I say is I always try. I always make this limit order. So as soon as I get $33, I say to Siri, what is 25% of 33?
The answer is 8.25.
So at $8.25, if I can recoup that, that means that I am going to profit 75%. Any less money than that, that means I'm going to profit more. So essentially, I want to give back $8. And if I give back $8, I am going to win. So I am going to set a limit price and give back $8. Now to do so, that's going to be 0.08. It's going to be confirmed by my max cost. And then I am going to make it good until I cancel. All right. It's as simple as that. I'm going to review the order. It's not going to fill right now because $8 is way below the current value, which is why you really can't do it good till the end of the day. You have to do it good till it expires. And then it's going to hold that. And at any time, 9:30 in the morning, when you're not at your computer and it hits $8, boom, it's going to close that option for you. You're going to get that notification. You're going to say, yes, I didn't have to do anything. I just locked up 75%, and now I can go into Robinhood, and I can rewrite for a further out expiration and collect even more premium. So I press submit, good to go, done. Like I said, it's going to be pending. It is not going to close. Now, this doesn't mean that you can't go in and manually change things. Say it's like Thursday and you're at like 60% and you want to do that. Very, very easy to fix this. If we go down to our history, you're going to see the pending. This pending is for 75%. If say I didn't want 70 and I wanted to close it today at 60, all you'd have to do is cancel this order and then go back in and place it for a value, whatever it is that day at the time you want to close. So a little bit faster, guys, without even talking through it, just to show you what I mean. I'll bring up another one I did today, WBA. Siri, what is 25% of 38?
The answer is 9.5.
Boom. So I'm going to come in here. I'm going to press 09. Max cost is going to be $9. I am going to make this good until cancel. Review order. Submit. That's done. I don't have to worry about that one. Now, I will say with my poor man's covered calls, like for example, Starbucks right now, that right here, I like to close those at about 40 to 50%. And you might be thinking to yourself, Brad, what the hell happened here? This is at 76.47. I saw it really moving today, and what I wanted to do is I canceled that out today because I knew it was going to blow through my 45, so I kind of wanted to see where I was going to be, and tomorrow morning I'll probably end up closing this. And that's what I mean. Like, you could still monitor it. You're not locked in to that 75 or that 45. I saw Starbucks making a move. I said, let's cancel that because I have a pretty good idea after watching this. It's going to get me a lot more profit than 45, and I'll still be able to close it. 75, honestly, guys, is just a percent that I came up with. As we saw, sometimes there's fraction of a cent, sometimes it's a little more, sometimes it's a little less. But I think the real benefit that you are going to see is closing early and then rolling it out for even more premium. Trust me, when it's like Thursday and there's $3 to $5 left, it is not worth waiting one extra day to get that $3 when then it's going to expire on Friday, and then Saturday's going to go by, Sunday's going to go by, Monday may not be favorable, green or red, and then boom, you're at Tuesday and you're 4 days away from expiration again, and the premiums for 4 days out suck. So to get $3 on Thursday and Friday of the previous week, when you could have just gave back the $3 and opened up for another $18, $19 for the following, trust me, it is a good practice. And sometimes you get lucky. You write a call on Monday, it gets to like 60% profit on Monday. Boom, close that thing out. Open another one on Tuesday. You still have 5 days. And these are the things that we start to think about. But guys, please, I beg you. So many people use limit orders to open. Really take advantage. Take some work off of your plate. I would not be able to manage 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 different options contracts going at one time with calls and puts and cost bases and the markets up and down and all these. I would not be able to manage it all if I was watching each one and I was saying, okay, all right, it's at 60%, maybe it'll be 75%. You feel what I'm saying? Use the automation, use these limit buys to clear up your schedule. You will be notified when it closes that option, and then you can go in and manually take care of it. Guys, I hope this helped. Really like simple video, but I think really important. It's going to up your game. It's kind of like a little pro tip when we get to the wheel. If you have a friend that's trading the wheel, ask them, do you limit buy to close? And if they don't, and you found value in this video, I beg you, please share this video with some other people. I'm so close to 100,000 subscribers. I cannot believe it. I might even hit it by the end of the year, which would just be fucking dope. I'm not going to lie. So share this video with a friend. Give it a thumbs up so the YouTube algorithm pushes out. Until I see you guys in the next one, stay positive. Work really hard. Always, please, I beg you, be kind to other people. Hope you have yourself an amazing day and even better tomorrow.